thank you so much for being a part of the conversation. We're shifting focus away from Ramadan now, still talking about the economy now, as we look at what are the loopholes that are facing the Nigerian economy at the moment. Before we get talking, let me tell you that Nigeria's economy still lies in the doldrums despite spirited efforts by past and present government revival. The country is no doubt facing its worst economic crisis since independence 63 years ago, as the cost of living is gradually becoming unbearable for the citizens. It is worthy of mention that Nigeria's economy has been facing some structural challenges in recent years, including foreign exchange volatility. Of course, we're getting to see some kind of stability in the foreign exchange market, going by the latest move by the Central Bank of Nigeria to clear the backlog of forex it's inherited by the previous administration under Godwin Emefiele. High inflation rate is still there, worsening insecurity, infrastructure deficits, naira appreciation, high employment rate, amongst others. The rise in uncertainty in Nigeria's macroeconomic environment is on course to further deepen business activities, with some more firms seeing closing of shops this year. The unstable macroeconomic indicators have no doubt affected the medium and long-term plans of many businesses, a situation many economic experts say could drive down profitability, lead to more job losses, low tax revenue, threaten the survival rate of many businesses, or trigger more exit of multinationals. To discuss more on this and give us more insight to some of the burning macroeconomic issues we're being faced with in the country at the moment, I'm now being joined live virtually by macroeconomic analyst Olaide Banu. Mr. Banu, good morning. Thank you so much for joining me on the show today.
Good morning. Thank you for having me.
Yeah, we're having a conversation before we came on air. I'd like to get your thoughts now. What is your overview of the Nigerian economy in this first quarter of the year 2024?
In this first quarter, I would say it started with a very challenging momentum. In which the exchange rate rise from about $900 per dollar to about 1,800 naira per dollar. So it's a very kind of challenge. This also increased the inflation rate from 28% as of December to what we have now as February, which is 31.7%. The price of goods and services increased significantly within this period. So I would say it's kind of challenging, but some of the closing half of the Q1, we begin to see a kind of momentum gain in the economy as the exchange rate begins to decline.
All right. Three things you just made mention of, and I'm going to point them one after the other. You talked about inflation rate. You also talk about exchange rate. And also let me make the addition of interest rate again by the Central Bank of Nigeria. Let's break down all of this one after the other in the course of the conversation as time will permit us. Let's start off first off with inflation rate. Inflation rate as we speak right now is about 31%. The Central Bank of Nigeria Deputy Governor has made a projection that the March inflation rate report we're going to be seeing in April the 15th is going to skyrocket to 32.63%. Now, if that projection go by to be a reality, what do you think life will be like for the average Nigerian, especially at a time when our Muslim brothers and sisters are observing the holy month of Ramadan?
To be realistic, based on that, I would say inflation rate is still expected to continue to increase. That's based on what we are seeing, that the rate will continue, and the price of goods and services are really not declining despite the decline in the exchange rate and all that is. It's very realistic because we are also during this month of only month of Ramadan.
Yes.
What people consume most are the edible food, the foods, and what people can share among each other. So this also affects because of our inability to produce so much goods as much as possible locally, especially the agricultural produce. If you look at the GDP in the past quarters and the GDP figures, we begin to see a kind of decline in the agricultural growth rate. So we've not been producing as much as possible in terms of what can affect the price of inflation rate to continue to skyrocket. And another thing to add to it, if you look at the numbers over years, the index points of the inflation rate has been increasing gradually. It's just that the year-on-year growth rate may kind of decline at a particular month compared to another month. So that's what we are seeing. But that's the reason why we begin to say that the price at which you are buying a particular goods about 2 years ago, 3 years ago, it's not the same price which you are buying it. So you see, but that okay, inflation rate is realistically to go, but we begin to see a kind of decline towards H2 2024 in terms of the growth rate and inflation. But realistically, the price of the services is still continuing to be on a moderate level.
Yeah. So one of the major factors responsible for inflationary pressure, the high inflation rate, is the volatility in the foreign exchange market. With the development we saw from the CBN clearing forex backlog, we're seeing some gradual stability coming into the foreign exchange market. As at Wednesday, just this week, I bought a bag of rice for 88,000 naira. The big question now is, at what point are we going to see inflation rate coming down so that Nigerians will begin to have a country they can proudly call their own and then have hope about this administration?
We may begin to see decline in the price of goods, especially food products, and as you have mentioned, in terms of imported goods like rice, as well as what you can produce locally. It's based on two factors. Number one, recently, I think around last week, the president ordered the opening of the Niger border, both air and land. We see that the south region border to the other neighboring country is still closed. So if that is open, it will increase the supply of that goods in the economy, and also the issue of FX in the market. Looking at what we are being currently experiencing, which we see expect to be, but currently I think the exchange rate is around 1,500 naira per dollar. So if we continue to see a kind of decline in the dollar rate in the next couple of months, then we may begin to see decline. If that two factors is being addressed perfectly, we begin to see a kind of decline in the price of goods in the market.
So let's get your thoughts on this development by the Apex Bank clearing off FX backlog, about $7 billion of them. First off, the big question many people are asking is, where did the Central Bank of Nigeria actually get forex to settle this backlog? That's one. And then secondly, what will be the value of the naira in the coming weeks and coming months? Are we going to see the value of the naira appreciating? Are we going to see a kind of stability in the foreign exchange market? And if for any reason there's going to be any form of volatility again in the foreign exchange market, what do you think will be the cause of that? And how well should the Central Bank of Nigeria be positioned to tackle that? Let's get your thoughts on all of this.
On the first question, that's what is the mode of the transaction for clearing the FX? The CBN obtained in the forward transaction to clear the FX backlog. So this also affects especially the majority of the airline companies as well. But the other question is saying that where are we expecting the exchange rate to be in the next couple of months? With this clear of backlog, we know that in the recent years, the reason for this exchange rate increase was because of the non-ability of the CBN to clear the backlog. The demand is very high in the market. So now that we are seeing moderate demand compared to where we have the backlog in the economy. So now we expect the exchange rate to be around 1,200 to around between 1,100 and 1,200 in the next couple of weeks.
All right then. Let me get your thoughts on interest rates, which is very fundamental as well. Over time I've had analysts come to this studio on this platform and they tell me that the CBN does not have the capacity to control these three: interest rate, foreign exchange rate, and also inflation rate. The CBN has to focus on one and ensure that it drives home some kind of reform that will bring about a stabilization in any of these three. Now, we've talked about inflation rate. We just finished conversation about foreign exchange rate. Let's talk about the interest rate. The Central Bank of Nigeria MPC had a meeting last month, the first under Yemi Cardoso, and they are scheduled to meet again this month, next week precisely. If the MPC will be meeting by next week, do you see a further hike in interest rate, or a reduction or a retention in current interest rate, 400 basis points from 18.75% to 22.75%? That's too much of funds for small businesses if they are to seek the commercial banks for funds. What is your outlook as the MPC set to meet next week?
So let me first put it in this action. If you look at the inflation rate we experienced over years and the increase in the NPR,
Yes.
because there is no correlation between the two. There is no perfect correlation between the two. In the sense that the exchange rate is continue to increase at those periods, while inflation rate also increase, which is not supposed to be. We expect the inflation rate to decline modestly within that period. But what the CBN has done last month was that to increase the NPR significantly, increase the CRR as well to 45%. With this mop up the excess liquidity in the market. This liquidity was also the one chasing the foreign currency when there is too much of naira in the market. Not down to the grace and means that was done during the former presidential era. So this excess liquidity is what the CBN is currently mounting up with other measures which the CBN is doing now. That is making the exchange rate to decline as you see currently now. So what I'm expecting from the CBN in the next MPC meeting is that I expect a moderate increase, moderate tightening in the NPR. Though this may be more moderate compared to what we see in the last meeting. We will begin to see a kind of 100 or 150, between 100 basis points and 150 basis points increase.
All right. With the further tightening of the monetary stance, and it's not adding any value to inflation, do you think that's the best way the MPC should go at this point in time?
I mentioned earlier, what is also affecting the inflation is also the closure of the border. If they can order the opening of the border at least for a period of time, this is to at least for other manufacturers also to beef up their production while people are also enjoying the supply in the market. So within that period, when the local supplier can beef up can increase the supply to a significant period, to a significant quantity, then you begin to see a kind of. But currently, you're not able to see that significant decline in the price of goods and services.
All right, now we need to go now, but before I let you go, in 30 seconds, I need to get your outlook on Nigeria's economy. By next month, hopefully, we should be getting GDP report, and we should also be expecting GDP report for the first quarter of this year. We also should be expecting inflation report out. The MPC will be meeting this week as well. So your outlook for the next quarter, vis-a-vis this macroeconomic indices I rightly mentioned.
We expect the inflation rate to continue to increase, though more on moderate form. For the interest rate, we expect the interest rate to be tight, as I said earlier. For the FX, we expect the FX market to moderate between 1,300 and 1,400
All right.
in the next quarter.
All right, then. We'll leave it at that. Olaide Ban, macroeconomic analyst, thank you so much for your time with me on the show this morning.
All right, thank you very much.
All right, then.